Welcome to the Digital Monetary Institute Symposium on Central Banks and Digital Currencies, for those of you who have just joined us. I'm Patricia Haas-Cleveland, President of OMFIF US, and we're very pleased to have with us Mike Novogratz, founder and CEO of Galaxy Digital, to discuss the institutionalization of cryptocurrencies and whether we are indeed seeing the birth of a new asset class. Mike, welcome.
Thank you.
Thank you for joining us today. You bring a unique perspective running Galaxy Digital, one of the world's largest cryptocurrency and digital asset companies. You run a number of business lines, trading, asset management, investment, and while you're based in the US, you have offices and business running in Europe and Asia, and you're listed on the Canadian or Toronto Stock Exchange. So you have a wide lens into the industry. To start, let's turn to the current state of play in the crypto industry and disentangle some of the headlines that are out there that have been dominating the news in recent weeks. At one end of the spectrum, we've seen the cryptomania surrounding Dogecoin, which started out as a joke, as well as record Bitcoin prices. But at the other end, we've seen the public listing of Coinbase, one of the largest cryptocurrency companies and wallets, which fetched $85 billion in valuation and during its NASDAQ debut a couple of weeks ago. And in between, we've seen many institutional players enter the industry. So two questions for you. Where do you see the evolution of the crypto industry at this point? Is it in fact going mainstream, and will crypto emerge as a new asset class? And secondly, how do you view the recent Coinbase listing, which you have described as the Netscape moment for the crypto industry? What did you mean by that?
Yeah, let me start with question two, and then I'll come back to question one. So categorically, I think the Coinbase listing stamped loud and clear an exclamation point on the sentence that this is now an asset class. I couldn't have said that 18 months ago. I couldn't have said it pre-COVID. But the acceleration that we have seen in institutional investors in every bucket, from hedge funds to real asset managers to insurance companies to the wealth channel, all moving into the system. The players from tech companies, people like PayPal, Tesla as a corporate buying, banks like Morgan Stanley partnering with us to address their wealth channel. So the institutional players have all said, hey, this is something real. And it's now an asset class, right? It's a $2 trillion asset class. That's only 0.5% of global wealth, right? And if you just look at the trends, in 2 to 3 years, it's going to be 2% or 3% of global wealth. And so it will continue to be an asset class. What's complicated is not one asset class, right? Coinbase isn't a fintech company, it's an ecosystem company. Galaxy is not a fintech company. And so let's roll back a little bit to what I mean by that. Crypto started really in the wake of the financial crisis in 2008 as a revolution. It was, we don't trust the center. We don't trust, all the central bankers. We don't trust governments. We don't trust corporates. We don't trust JP Morgan. And so it was started as this rebel movement of how can we have a peer-to-peer system. And Bitcoin was originally going to be digital money. And I think it's morphed over time to a much more sophisticated ecosystem where Bitcoin is no longer vying to be digital money. It's vying to be a digital store of wealth, and it is a digital store of wealth, right? It is digital gold. And quite frankly, that's made a lot of central bankers a lot less nervous. You're talking about Diem later on, when the original project that Facebook had in mind called Libra showed up, central bankers in the US and politicians got really, really nervous because they're like, wait a minute, you can't try to create your own currency. That's our job. The Diem project was the Libra project was originally a basket of cryptocurrencies that would float. And over time, it could move away from the basket, kind of like the Singapore dollar. And I think rightfully so, maybe, politicians on both sides of the aisle didn't love Facebook anyway and got very, very upset. And so Facebook went back to the drawing board and said, hey, we're going to come up with a central bank issued digital currency, in essence, just a private one, right? Diem, it will be a digital wrapped dollar. And so what's interesting is post 2017, when we had a 98.5% crash in the crypto ecosystem. Think about that, 98.5% crash. Out of that mess, we started to have more rational lanes coming in. You've got the store of value lane where Bitcoin is the dominant player. It's the best brand that's been created in the world in the last 12 years, right? It's the only $1 trillion brand that didn't exist 13 years ago that exists today. Bitcoin is held in every village in every country in the world. It's the most distributed asset other than the dollar of all time. There's not a CEO of Bitcoin. My kids like to think I'm the CEO, but I'm not. But they're proselytizers. They're people telling the story of why it works. There's a huge amount of money spent protecting it, right? There's an energy cost to it. We want there to be an energy cost to it because you're protecting $1 trillion on its way to multi-trillion dollars of wealth. In lots of ways, its success has been because of the central bank and fiscal policy that we've seen in the last 18 months. Right? There was a giant acceleration post-COVID. I spent my whole life growing up as an investor believing in independent central banking. And now in the United States, we have a minister of finance, secretary of treasury who was a central banker. Like, that's so metaphorically important to think about. Like, we've lost this concept of independent central banking in most countries with this gigantic printing of money, this blowing out of deficits to record levels and monetizing them. And so Bitcoin itself is being used as a hedge to that, as a way of people who can store value, who worry about fiat. No one's buying and selling stuff in Bitcoin, right? Nor do I think they will. And I think what's exciting is this new lane of central bank issued digital currencies. Some will be private. I am a big advocate in doing them private. I look at what the Chinese are doing and it scares the heck out of me, right? Like, a blockchain is just a shared database. If I share it with myself, man, I got a lot of information. If I share it with 4 people, that 4 people have a lot of information. And so the more decentralized it is, and the balance between where privacy lies and what information governments or other actors get is a really important distinction on what would be a great tool for humanity versus a really scary tool for humanity. And I think those things need to be really thought through. But it is clear to me that payments are going to shift onto a blockchain. And that's revolutionary in lots of ways. It will be painful for banks. It cuts costs to consumers. It, quite frankly, is unbelievably progressive, right? You think about the amount of unbanked in the world, and all of a sudden, anyone with a smartphone can be banked. And so when PayPal got into the space, right? PayPal has 330 million customers. They're only the 90th biggest bank by deposits in the United States, but by customers are the biggest. It scared every bank thinking, hey, we are shifting from bank accounts to wallets. That process is happening. And so when I talk about crypto as an ecosystem, it's this kind of rebuilding of the financial rails in a blockchain-based system. We're really early, right? So Bitcoin's a mature product. Bitcoin will look the same as it does today in 10 years. The rest of the crypto ecosystem won't, right? Ethereum, the second biggest project, which is vying to be, I'll call it the decentralized supercomputer of the world that processes and authenticates data, right? That's kind of the Ethereum product, the base level of trust that people will build on top of, build stable coins on top of, build DeFi solutions on top of. All of that, they've got a lot of competition. There's other people that want to, other ecosystems that want to do that. And so it's too early to tell. Will Ethereum win out? Will it be some combination of chains? But I would tell you the amount of energy, the amount of young talent, computer science talent, commercial talent moving into that space is breathtaking. And there's a lot of complicated decisions. Will the consumer demand something really decentralized? Or will they opt for a better user experience? And I don't mind if it's decentralized. And so you see new ecosystems like Solana and the Terra system sprouting up overnight. And and creating giant value, 15 billion, $20 billion of value, and they're being used. And so we're at this point where crypto is moving from being an experiment in a sandbox to jumping out of the sandbox and having real world use cases. One of my favorite examples is Luna token in Korea. The Chai payment system is now used by 7% of total payments in Korea. It's a blockchain-based payment system that speeds up processing from 6 days to 6 seconds. And so it's wrong to think this is a fad. It's wrong to think this is tulips. Listen, in any revolutionary technology, in any paradigm shift, you have frenzy and fraud, right? GameStop, the stock in the US, which defies logic, trades at a $12 billion market cap, and Doge are the same thing. This idea of memes is real. It is a young generation of people that almost have a nihilistic anger to the system that say, hey, we're just as smart. It reminds me in some ways of Trumpism, like I can't talk logic that these have no long-term, or I don't think they have long-term lasting value. But it's something to watch and listen to, right? Crypto is the voice of Gen Z. It's the voice of millennials. Gen Z and millennials are angry at central bankers and politicians and Ministry of Finance officials who have mortgaged their future with these giant deficits. And this is their way of fighting back. And even if it's not conscious, it's in the subconscious. It's why it started young. That $2 trillion of wealth that's been created, a lot of it has been created with young people, which is probably a good thing. And so why do companies like Tesla put corporate cash onto their balance sheet? They do it for 3 reasons. One is they're like, we're worried about fiat. 2 is, what a great messaging to our young consumers that we hear you, that we understand where you're coming from, right? It's unbelievably powerful advertising. And 3 is, we see the future that we're going to accept payment in central bank issued digital currencies, in any form of payment, right? Because of zero interest rates around the world, how people think about value is changing. I bought a LeBron James basketball card for $1 million because I love LeBron James. And my mother thought I was completely insane, completely and totally insane. It traded for $5 million yesterday. Is that a bubble? Yeah, probably, but it's a relook at how people want to hold value because we've got free money, right? And it doesn't look like that money supply is being turned down anytime soon. And so this is the balance that you're trying to navigate as an investor. There are going to be tempest in a teapot bubbles. You see it in NFTs right now, but it's stupid to dismiss what NFTs are. Like, yes, $69 million for the Beeple painting is idiotic, but with 100% certainty, NFTs will transform how we think about IP, how we think about creators, ownership of their work. Sorry, that was such a long answer.
No, that was great stage setting, and I think it provided really excellent color for what's going on today. You talked about, how are things going to be 10 years down the road, or that Bitcoin will probably still be the same 10 years down the road, but there'll be a lot of differences with other aspects of the crypto system. Clearly, a lot of things will happen between now and then. And one of the things that has to happen and is happening at very different degrees is the regulatory aspect of it. And I think we see different responses in different countries and different jurisdictions. And we've certainly seen in the US a response that this is mostly speculative kind of craziness in terms of what Bitcoin is used for and some of these other developments. So for the ecosystem to develop further, as you discussed, clearly there has to be some kind of regulatory framework in place. So I think part of getting down the road and allowing the industry to blossom and to really take on the opportunities that you allude to is having regulatory oversight that allows for innovation. If right now the main perception is that this is the main use of Bitcoin is speculative, what do you see as other uses And you alluded to a lot, and we have seen even WeWorks, Tesla, PayPal, they're all allowing for payments in crypto and in Bitcoin. And as you said, a lot of the mainstream banks, Wall Street firms are coming in they are offering exposure to crypto, JP Morgan, Morgan Stanley, Goldman Sachs. So we're seeing a lot of mainstream happen, but from a regulator's perspective, if the view, as Chairman Powell recently said, this is really just used for speculation, where do you see the next steps as it evolves down the road and use cases for other things besides speculation? How do you see that evolving?
Sure. So to start with, I think, it's a great win for the United States that Gary Gensler is now the head of the SEC. Gary taught a class on blockchain and crypto at MIT. He's very knowledgeable about the space. The old Chairman Clayton, just didn't want to deal with it. It was too much of a headache on his. It wasn't where his focus was. And so we went this long period of time without any clarity from the regulators. Gary has already said he thinks Bitcoin wasn't a security. He thinks Ethereum wasn't a security. And so there's some things that he's on the record with that I think are very promising for the community. And I do think him defining rules around how you can raise capital through crypto, what's a security offering and what's not, will be very helpful to the system, right? People want some sense of clarity on what's allowed and what's not allowed. And so I think that's going to be positive. Listen, there's a lot of education that continues to go on. Both Secretary Yellen and Madame Lagarde in early, tenures were asked about Bitcoin, and they said, "Well, we're worried it's used for illicit uses." That was an uneducated opinion, with all due respect. Recently, the ex-head of the CIA came out with a very detailed report where he did a 10-week deep dive into crypto, talking to all the intelligence agencies, the policing agencies, people in the security space, and said, quite the contrary, less than 1% of total Bitcoin transactions are used for anything illicit. And the great preponderance of that is scams. That's it's way less than cash, and it's even less than the legacy financial system. Matter of fact, the people in security he talked to said, if we could create a system to monitor, criminals, it would be something that looks like the Bitcoin blockchain. And so I think you're going to see the Bitcoin community help educate people to understand, hey, we can understand you're nervous, right? Listen, I think Bitcoin's a report card on how central bankers are doing. And right now, people are nervous about the financial system, right? Traditionally, and I was an emerging market investor my whole life, there was this crazy thesis that fiscal policy mattered a ton to the shape of the yield curve of the currency in a developing market, and it didn't matter at all in a developed market. Mm-hmm. In between, there was this zone where who knows where it flips. We don't know where that gray zone, where that Minsky moment is, where people lose confidence, but we know we're getting closer just because we're running gigantic deficits. And so it's not irrational that people want to hedge that. So hard assets are going up, and Bitcoin is now believed to be a hard asset. And so there's nothing crazy about the price action. It's accelerating because of adoption, right? Mm-hmm. When a new asset class is built, if you're not long, you're short. And so people that don't have some feel short because it's now become an asset class. I used to ask people, like, at one point, if Paul Jones and Stan Druckenmiller and Ray Dalio, and who else do you need? Do we need Alan Greenspan to deem it store of value? Like, what creates a store of value? It's a belief system, right? The market and people are saying, we believe Bitcoin's a store of value. It's not the technology, right? If we can take the technology and call it Patricia coin, and it probably wouldn't be that valuable, right? We could fork it, we could call it Novo coin and have no value. It's a social construct that people now believe they can store their value in Bitcoin, just like gold. And so, this idea of banning Bitcoin is ludicrous in some ways. Every country that's tried has seen Bitcoin use go way up. And I think it's important to understand that people aren't using this to buy things. This is not a transactional currency, right? It's a store of wealth. And I think the benefits of using the blockchain for transactional things are going to be immense. Right now, I can send you a photograph of me on one of 72 different apps, and we'll get there in a second with all those pixels, but I can't send you money. That makes no sense in lots of ways.
No, I think to your point, educating folks about more of the details, the possible uses and benefits is really one of the critical things. One of the arguments that you hear from time to time is that actually moving towards a digital economy, moving towards digital currencies really helps to promote sort of a democratization, if you will, of the economy. That individuals who normally couldn't participate are indeed able to, using digital currencies. They can access Bitcoin through wallets. They can, or through ETFs like the one you launched in Canada recently for Ethereum, and also that they can buy fractions of stocks that might be too expensive for them through the stock tokens and tokenization of stocks. So it does seem that there is this positive benefit, and a lot of it really does derive from the underlying technology of blockchain.
Even if you go as simple as going to the ATM, if you're a low-income American or a low-income global citizen, and you go to the ATM, and I take out $20, I pay a $3 fee. Like that's a 15% tax from being poor. If I wire you a dollar stable coin, it's about a 1 cent fee. You know, like, and so when you think about who is helping most, it has to be people who get left behind because, you know, the legacy cost of business is so high. Why DeFi is so scary to banks, and you will see the banks put up a huge fight with all this, what they call FUD, right? All this confusion around DeFi is because legacy systems are really, really fat and complicated. I remember when I was at Fortress and we almost sold to Merrill Lynch, who then got sold to Bank of America. I met with the head of Bank of America, and they told us they had 59 different risk systems, 59 risk systems that they needed to orchestrate. It's an impossible thing to stitch together. These DeFi companies are people-less companies, they're driverless banks. And right now there's a big regulatory question, right? We don't use them at Galaxy. We invest in them, but we won't use them because we are really conservative around knowing your customer, right? Which is everyone's worry. But I would tell you there are 4 or 5 technologies that are streaming down the path that will allow me to transact against a smart contract with certainty that the person on the other side of the smart contract is a KYC customer. The moment that happens, the regulators have no one to regulate because it's code. There's no people there, so you can't regulate the code. You can regulate the user of the code, and we're going to say, hey, we KYC through this system. And so I think you're going to see an explosion of growth, and partly because you're cutting out all the fat, and it's transparent. Everyone can see the transactions, right? That's the beauty of the blockchain. And so if I'm the NASDAQ, I'm worried. If I'm the London Stock Exchange, I'm worried. If I'm the New York Stock Exchange, I'm worried because there's systems like Uniswap or SushiSwap that do what they do with none of the people. And so this is an unbelievably powerful revolution that's just starting.
Yeah, one of the questions I want to ask you, and you've actually really answered it, in addition to the fact that there are a lot of benefits for the consumer in these developments, is given your background in traditional finance, both running Fortress and previously at Goldman, you obviously know that industry extremely well. And if you look at the impact on traditional finance, it really is bound to be profound. And it's not so much by the cryptocurrencies themselves as it is by the underlying technology that's the real disruptor here. So I don't know how you see the traditional financial world responding. There will be winners and losers going forward, but at the end of the day, if there is adoption and adaption and evolution, hopefully the industry benefits as well as the consumer.
I see them adjusting slowly, and I see the tech companies adjusting much quicker. Right?
Yeah.
Think Visa is all in on crypto now.
Yeah.
Right? When I first bought Bitcoin, I thought, wow, we probably should sell Visa. What a stupid idea that would have been. Right? Visa's gone straight up as the world's economy grew. Now they are pivoting as fast as they can into crypto. I don't think the legacy banks, both European, Japanese, US, can move fast enough. So I think it's almost, as an investor, imperative to have some money in the ecosystem, the crypto ecosystem, to see what it's going to do to the banking system.
Yeah, no, absolutely. I'm cognizant we're rapidly running out of time. I did want to turn back briefly to your comments about central bank digital currencies. Obviously, again, they're moving at different speeds in different countries. We've seen China take off. Some say in part because of the private sector being so successful with mobile payments that the central bank decided to introduce its own. In the US, movement is a lot more slow, but indeed the Boston Fed is now looking at a digital dollar prototype, working with MIT. How do you see central bank digital currencies evolving and working and coexisting with crypto? And will they have different uses? Will one continue to be more of an investment asset and the other used for payments, or how do you see this playing out?
Yeah, great question. Two things. I think this is going to be a bit of a Cold War, right? China is way ahead in fintech. They're way ahead in the building of their own central bank issued digital currency. It is completely a centralized, system. To me, that's scary. But if it's starting to get used in the Mideast and South America and in Africa, that's a big issue for the US, right? We have a giant deficit to fund, not a small deficit, it's a big one. And being the reserve currency is a pretty powerful thing when you're funding a huge deficit. And as money moves out of pillowcases and into digital form, right? There are more $100 bills abroad than there are $100 bills in the US. There are more $100 bills than there are $1 bills in the US. We want, if you're the US government, you want people to be using the dollar, not the digital renminbi. And so I think you're going to see a race, certainly between the US and China, to get the digital dollar out there. I don't think the US will be a central bank issued digital currency. I think the current framework is letting private companies like Diem, like USDC, create these digital dollars, but have them regulated by the Fed, have the deposits kept at a Fed bank, and have them back one-to-one and authenticated, right? And so it brings up lots of questions. How do you do fractional banking? How do you really increase the monetary supply? It's a challenge for the central bank. I remember in 2012, I was on the Fed's markets committee, and I brought the idea of Bitcoin to Bill Dudley and his team to talk about. And it was interesting. They had amazing insight back then. They were like, dude, fixed supply currencies don't work. Too easy to squeeze, too easy, price movement. You need, and so we're not worried about it. But they were fascinated by the concept of it for payments. And their intuition was 100% right. Bitcoin's not going to be the payments currency. It's going to be some other version, either a central bank issued backed one or an algorithmic stable coin, but it's going to be something that stays stable. But it's the same rails. And so when I open my Diem wallet, the Novi wallet Facebook is going to create, where 2.5 billion people are going to have access to in the next 6 months, you'll be able to flip between dollars and Bitcoin, or dollars and Ethereum, or dollars and other things. And so all of a sudden you're managing your portfolio on your wallet. That's why Facebook, and you can ask, is putting so much effort into this. It's not that, oh, we want to create this stable coin. It's, we want people's finances to happen within our ecosystem.
Yeah. So that's a great way to I guess say, if I can paraphrase you, is that both crypto and central bank digital currencies can and will coexist, and they may be used for different purposes, but you will have an active participation by the private sector in there, and you should.
100%. And quite frankly, that same wallet, you're going to keep your NFTs, you're going to keep your tickets to the theater, right? Like, value is going to be held in these crypto wallets, and how we think of value is changing.
Yeah. So the future of money is really, stay tuned. There's a lot going on, but that we see both the government and the private sector working together, and hopefully a lot of innovation for the benefit of everyone continues.
It is the most exciting time to be a macro investor in the history of the planet.
Mike, thank you so much. It was a pleasure to have you today. We very much appreciate your insights on the crypto industry and whether or not this is going mainstream and being institutionalized. You've given us some great answers. Thank you so much.
Thank you.